Welcome, D-traders. Today, stocks saw a bearish start in the Asian session, while Japan's Nikkei tested its lowest level in 2 weeks. Australia's indicator hit its early low. Global markets fear higher interest rates and the escalating geopolitical conflict. Meanwhile, investors are still concerned about the Chinese economy. According to analysts, capital outflows from China increased sharply in September, amounting to about $75 billion, a record since 2016. On a Monday, the gap between China's benchmark 10-year government bond and the US Treasury yields reached the highest level in 20 years. Over the weekend, the country's authorities pledged to prevent the spread of risks and ensure the stable operation of financial and foreign exchange markets. At the same time, People's Bank of China Governor Pan Gongshang said that measures would be taken against the risks in the stock, bond and foreign exchange markets. The central bank will be proactive, and the Chinese currency may receive support from the regulator's auctions. In Asian trading, the yuan weakened toward the limit of its fixed trading band against the US dollar. The US dollar rose against its major counterparts today. In the Asian session, the US dollar index recouped some of its losses and approached 106.20. Demand for safe haven assets strengthened, sending the US currency higher within the range of 106.10 and 106.30. Meanwhile, US Treasury yields support the US dollar upward momentum. For example, the benchmark 10-year Treasuries exceeded 5% per annum on Friday, the highest yield level since 2007. Remaining so until Monday's Asian session. However, US Treasuries were not the only factor that pushed the US dollar higher. Last week's optimistic economic reports from the United States are fueling the bullish momentum. For example, the employment data continues to point to a robust labor market. Despite this, more than 98% of the market expects the Fed to keep interest rates unchanged at its November 1st meeting. The dollar-yen pair was trading near the critical level of 150 as the US dollar strengthened. At the start of the Asian session, the yen jumped above 150 but failed to break above the October high of 150.16. This fact fueled speculation about the Bank of Japan intervening in the forex market. At the same time, 10-year government bonds in Japan reached 0.86% and the highest level since 2013. For the country's central bank, this could be a reason to adjust the yields again. Now, markets will be paying more attention to the psychological level of 150. If the pair breaks through this key resistance, the country's Ministry of Finance will likely have little choice but to intervene in the forex market. Some investors are betting that the Bank of Japan will defend the level of 150. At the same time, others are pushing up the US dollar due to the high of a US Treasury yield. Under the influence of these two opposing trends, the dollar-yen pair began the trading session with a correction within a narrow sideways range of 149.70 and 150. During the night, the yen strengthened slightly to 149.67. However, it then retreated during the Asian trading session and remained under pressure from the US dollar. At the same time, the greenback continued to outperform the Japanese yen despite falling 10-year US bond yields today. The greenback also rose against the antipoding currencies. While the world's major currency is recovering on the back of rising US Treasury yields, and the Aussie is losing strength on the worrying geopolitical situation. As events in the Middle East forces investors to turn to safe haven assets at the expense of riskier currencies, the Australian dollar began the week with a sharp drop to 0.63. As a result, the Aussie almost hit its early low. However, the price range of 0.6301 and 0.6324 proved to be very volatile, and by the end of the Asian session, the Aussie managed to cancel the bearish trend and climbed to 0.6320. Most likely, the Australian currency was boosted by high oil prices. Investors are also eagerly awaiting comments from the Governor of the Reserve Bank of Australia. Michele Bullock is scheduled to speak twice this week and is expected to comment on the latest economic statistics and possible interest rate moves by the regulator. The New Zealand dollar remains in a negative territory for the fifth consecutive day, today with the country's stock market closed for the Labor Day holiday. And the Kiwi is trading muted. As you can see on the chart, the Kiwi began Monday's trading session in a narrow range of 0.5817 and 0.5845. In addition, there is no major economic data expected from New Zealand this week. Therefore, the Kiwi dollar pair will likely continue to depend on the US dollar, US economic data and global risk sentiment. The Indian stock market broke out of the general downtrend in the Asia-Pacific equity indexes today. While its peers were trading in the red, the Indian market indicator performed better and remained almost unchanged throughout the day. The Indian rupee also continued to strengthen against the US dollar, trading in a narrow range of 83.11, 83.18 in Asia. The euro-rupee pair was trading at 88.17 today, maintaining an uptrend since early Monday. And that's all for now, but keep in mind that the market is changing constantly. Subscribe to the InstaForex TV channel. Leave your comments and questions below. We will be happy to get your feedback and see you online soon.